Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, May the 28th, the year's 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Just to let you all know, yes, I am back from the convention in Philadelphia. And let's just say it was a very eye-opening event, and that some federal agencies may be getting involved. I won't bore you with all the details because this is about trading. I'll probably do a separate video for my fellow union members. So anyway, it is also pretty much the beginning of the week. So let me just take a look at a few of these charts here. Okay, let's see. Oh, for the month, we are 306 pips above the monthly open, and we're almost 2 pips off the high and 352 off the low. Oh, let's see. Okay. And let's switch this back to weekly, and all the weekly gaps have filled. Notice we have missed the weekly pivot on the pound, and it looks like we've missed it a couple of weeks in a row. And looking at the opening range, we put in the opening range for the week yesterday. We are 20 pips above it at the moment. And for the year, we are now 86 pips above the open, so we've turned the year green again. Inside bar traders, notice we have broken out of the monthly inside bar that happened 4 months ago, and we broke out yesterday. And if you look at the dashboard, there's not much inside bar action at the moment. And for today, the pound's clocking in at 37 pips. And we only have one pair over 100 pips in range, and that's the Swiss yen. And I noticed that the dollar yen's back over 156. Okay, we look at the buy zone, and it looks like during today's session, you had a couple of times to go long. A short was never signaled. And rats, the range is really too low to play the rat zone. And looking at the pivot trading plan, Bambino Flex indicator said to go long. That paid off nicely. Price near pivot, never got near the pivot. Price was long at R1. It was calling for a short, but we're above R1 right now. And we're about 8 pips below R2 at the moment for the daily. And once again, we missed the pivot today. We missed the pivot yesterday. We missed the pivot 9 days ago, 12 days ago. So we're racking up some missed pivots here in the month of May. For the week, once again, 2 missed pivots. But on the month, we have taken it out. And anybody trading the wick zone, yesterday's upper wick zone, we've been in and out of it, and we're just now hitting 128, the double O. And looking at the dashboard, let's see, we're approaching the ATR zone. We're about 5 pips away on the upper ATR zone. So Walmal, how's your trading been today?
Slow.
Yeah, with that.
Yeah, it's been a slow day, you know, and the reality is yesterday was a bank holiday in the U.S. It was Memorial Day, and it was also a bank holiday for the UK. So I'm trading pound dollar, and so anytime we have a holiday on a Monday, and a lot of people, especially with the kickoff of summer here in the U.S., a lot of people take the entire week off, and so it's been very, very slow. I mean, we're sitting here right now with a smart range for the day of 38 pips, but that's only part of the story. The bigger part of the story is the fact that over the last 5 hours or so, we've had a smart range for each hour of 10 pips, 10, 11, 9, 11, and 14. So that's very, very eye-opening, type of thing where it really isn't very much movement. So what do you do in that situation? Well, you got two choices. One, don't trade. That's one possibility, and that's a legitimate thing to take. You just don't trade, because if your methodologies don't allow you to trade, you don't trade. You don't go and try to force trades. You go and take trades. And when I say take trades, what I'm saying is everything lines up, everything is in place, everything that you want to be in place is there, so that you have the best opportunity for the best result. You don't go and try to force things. It's just not a good thing to do. It's sort of like, if you're going to go and put this into a baseball analogy, if you're going up against a team where their best fastball pitcher is going to be starting the game, what does every single manager tell every single player? Take the first pitch. Why? Because what's going to happen is that you're going to force that pitcher to go and throw a fastball and throw it early. Sure, you're probably going to get a strike, but the reality is, if everybody does that on the team, you're getting the higher pitch count in, and so the pitcher is going to tire out quicker because you want him out of the game. You want to go and get somebody else in there that may not be as as good of a pitcher for you. Well, sometimes we have to do the same thing in the market. We have to just go and wait the market out and say, okay, I'm just going to wait for my time, and I'll go and take it, And it's funny because, we were joking around, before the phone call about the fact that we hadn't gone and done a video in a while because of some of your prior obligations, and because also, for me anyway, for the holiday. And it's sort of like, you had said, I wonder if I remember how to do this, and but that's part of trading too, and sometimes part of trading is getting back into the ball game and sitting down in the chair and watching it and paying attention to it and getting back into the rhythm.
Yeah, you definitely got that right. That's for sure. And the thing is, and getting in the rhythm is really getting in a headspace, because over the past couple days, I actually got back, what was it, last Thursday, but I didn't do a Friday or video because my head, I was nowhere in a headspace to trade, and Monday was a holiday. It's almost pointless in trading when the U.S. markets closed during U.S. time. So
Right. I'll go and take it even further. You said pointless. I'll take it further down the road and say it's dangerous, because I watched the market a little bit yesterday, because we were here in North Georgia. We were under a tornado watch. So I was watching it. I wasn't going to trade it, but there were times where there was no movement. Like sort of similar to today, and then all of a sudden, out of nowhere, probably because of some algorithm someplace, went and dumped a bunch of trades in. All of a sudden, out of nowhere, no news, no reason for it, the market just goes and jumps 15 pips in the matter of like 2 ticks. And meanwhile, it's in the opposite direction of anything that would make sense for it to go and do. And you just go and say, why in the world did it do that? Well, it was, like I said, some type of algorithm that was preset in some computer someplace to go and make some type of trade. And because on a normal day, like a normal operating day, it wouldn't move the needle at all. But because there was no volatility, there was no volume. When I say volatility, that's the wrong word. There was no volume out there so it couldn't absorb it very easily. And so what does that do? It goes and causes the market to spike in a particular direction for no apparent reason. And so you're just sitting out there, and you're going into the trade, and let's say you were silly and you were sitting naked. And what I mean by sitting naked, you didn't put a stop loss out there. Next thing you know, you're under 10, 15. Let's say you were under already before the trade 5 pips, 6 pips, and it continues in that direction, and you get a 15 pips in the other direction. Now all of a sudden you're at a decision point because you're now down 20 pips. Do I go and take the forced error and just get out of the trade, and take the big loss, or do I go and say, okay, this was probably just something that happened, it's a glitch, and it's going to come back, and you're probably right, but what if it doesn't, and you put yourself into a world of hurt there, and that happens a lot of times when you trade on days like that. That's the reason why I don't trade on, or don't. I have, so I don't want to, be incorrect about that, but I try not to trade on days like that. And one of the things I do to do that is I only place trades with my EA. I don't like to go and use the one-click buying and all that type of stuff that's on MT4 to go and place a trade, or the order table to go and place trades. I like to use my EA. And one of the things I do on a day like that, and even like today, I'm done trading for the day, I shut my EA off. I literally go and take that screen, and I literally go and just literally delete the screen, because tomorrow when I start up, I'll go and start up my MT4 again, and I'll just go and open a brand new chart, and then what I'll do is I'll go and put a template on it that has my EA on it. It takes all of 2 seconds. But why do I do that? Because it forces me to be disciplined about something. And then that should give you a clue as to why I do it. It means that I made mistakes in the past where I jumped into trades I shouldn't have jumped into, but when I was done for the day. And so by doing that and getting into that habit, I prevent myself from making mistakes. And I'll say this, I've said it before and I'll say it again, that's what we all need to be doing. We need to be putting things in place that mitigates, against ourselves, mitigates against our own mistakes and our own foolishness.
Yeah, I hear you. I'm sitting here watching the 1 minute chart with the M candle indicator that has the M30 highlighted, and with the flip-flop boxes, and I just noticed price bounce off that double O, and I was looking at this big candle thinking, yeah, it's probably going to head there, and sure enough, it went and took it out. Now I'm looking at the 95 and the 90 to see if it does its normal thing when it comes back across the double O. It needs to go and wipe out some stops.
Yeah, go to the other side of the 95 or go to the other side of the 90. Wipe out some stops out there. Remember that at least on my broker anyway, the open of this hour was a brand new H4 candle. So right now we're 4 pips above the open of the H4, and so a lot of people say, okay, we're above the H4 now. Okay, it's probably going to run. It runs away from the H4. Okay, I'm going to put my stops on the other side of that. So I want to go and put my stops somewhere around 90 or 91, and then watch it. I want to see this thing run for 60 pips up to 28.50 or something, right? But the thing is, so there's potential right now that somebody's going to go down and say, hey, there's liquidity down there, and you can see it.
Yeah, they just took out the 95, heading to 90.
Yep.
And you know what, Walmal?
We're at time.
Fastest 15 minutes in trading is just about over. But it's really something when you're away from something for about a week, how I can feel like my brain needs like some trading oil because it's like I'm seeing things, but it's just, it's a little on the fuzzy side. So, fellow traders, thanks again for watching and listening. And as you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.